Hi, I'm going to be starting the small account again this month to see if we can get a holiday. Roll the intro and I'll tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. What I'm trying to do is put trading in the real world. Maybe show you a thing or two along the way. So if that sounds good, please click the little subscribe button. Genuinely motivates me to do more of this. And talking of motivation, I was just about to tell you about a small account, but talking of small little people, say hello my dear.
Hi.
There's none smaller than her, and she's the supplier of coffee, because we all know Scruffy likes a coffee. But talking of motivations, Winky is my motivation, and she really is. And hold on, there's a running joke been going on. I did show you a photograph of her dressed up, but let's have a little ask. Oi,
Yes.
don't run away.
I'm not. It's not it.
Do you know this little thing about a gold bikini?
Yes.
What's the chances?
I don't have one.
If I bought you one? No. You know, I think cracking the Enigma code is easier than cracking her at times. You know, never mind, but that's women for you. Could have had a worse motivation. I could have been watching these.
You ding dong!
Sorry. Oh dear. I do like to stick it into them every once in a while. And the reason why I stick it into them is because it's a fable. It's not reality. Trading is incredibly hard. It really is. But not the charts and not reading the charts. That is not hard. What is hard is you. And you'll often hear me say that. The emotional side of trading is horrendous. You see, you've got to overcome those emotions. And if you can do that, you can build an account. And that is the whole process of doing this small account for you guys. Now, last month I built one up and I had to take it step by step. And talking of step by step, I've got the Telegram group behind me there kicking off like there's no tomorrow, having a jolly old time of things. But I keep telling the guys in that group as well, slow and steady. Don't look to be making $1 million in a week, you know, because all you'll do is blow your account. You know, take a few trades a day, only if the setups are viable, and if the setups are not there, don't trade. And then you'll find that your hit rate is higher, and you'll also find you have a little bit of money left at the end of the week instead of having a high roller today, losing the whole lot tomorrow sort of thing. It's just reading charts, but you have to be quite robotic. Now, you could say, well, an algorithmic trader is robotic. They are, but the algos can't take into account human nature. And they'll only work off what indicators tell them to do. And the thing is, indicators are lagging, all of them, and they just follow price. But what if there's a news event? An algo will never be able to judge that. So you have to switch it off. So you might as well trade the thing yourself, which is kind of my view. I would put myself against an algo anytime. And I do, you know, because I can read the charts. And that's what this is all about. So what I'm going to do is I'm going to show you the last trade of the day for me. It's just finishing off. I'm going to tell you why I got in. And then I'll show you the sheet at the end of it, just so you can see the results and get an idea of what I'm going to be doing over the course of this month, well, up to Christmas Eve. because I essentially have to double the account. So again, it's steady growth. I'm not looking to do it in a week. If I do, fantastic, but it's not part of the greater plan. The grand design is slow and steady. Take little bits of money out at the time, compound my winnings, and move the account balances up in a safe way. Now, last month I ended up on quite a good hit rate. I would have loved to have done 100% across the month, but I'm good, but I'm not that good. But I was in the high 90s, so I'm quite pleased with that. And the reason why I was in the 90s is because I was very, very conservative in the trades that I took, and I didn't take that many. And I'm going to do the exact same process for this small account to see if I can get a little mini break for me and Winky. See what we can find for January. I've kind of set aside that I want to trade it up to £300, 150 quid each. So that'll put us in a hotel for a couple of nights. Okay, and why not? And then we'll see how far this goes. I might do it again. And the idea, as I said at the initial statement of the video, is put trading in the real world. Show you how it can be done and why it can be done. And at the moment, my why is a holiday. So let's jump on the screen and see where we go. Okay guys, so like I was saying about doing this small account challenge, pushing the envelope a little bit with oil today, but it's because it gave me a double setup, and I've already taken a decent amount out, as you can kind of see here. I caught the FTSE this morning on the reversal of the plunge last night, and with the oil, what I was looking at was this gap. And when you see a gap like so, the markets will look to fill the gap. Certainly within a couple of days, they turn around and come back. Now, I just dropped a fib on it to see what was going on. I already had my S&R lines in, which contained the price. Drop in a pivot so you can actually see what is going on. And what caught my interest with this is all of the momentum blasted through the pivots, right the way through them. Didn't even stop to look at them. So that told me this thing is going up, and it's going to try and keep going up. So what I did was I kind of waited till it hit the 23.6, which married up to the base of the gap. Okay, dropped a couple of orders in above this, and then just watched it slam up, cashed out, result, happy days. But then it stayed above the 50. Now that captured my interest again, thinking, okay, if this is holding above the 50 and it's not retracing into the gap that it made, it's got a good probability of pushing up to these levels up here. Certainly here where it's already tested. So I thought, why not? I'll just take another trade, and this will be the last one of the day for this, which means I've grown that little account incredibly well today and put me on a good runner for this little break. And you can see it coming in front of us right now as we're talking. And it's pennies, guys. It really is just pennies. It's 40p a movement, 40p a tick. So it's just steady growth. And that's all I did last month with this small account. It was just steady growth, little bit, move up my sort of cost per pip each time. Some markets costs more than others, so your pip can't be the same. But with oil, I'm a little bit conservative with oil. At the moment, we're trading around 80 to 85p a pip. But because oil is so fast and erratic, I don't want to put myself at the mercy. I would rather have a wider stop loss and a smaller position size, which is what I'm doing here. And you can see it. It's moving quite nicely. It's pushing up, which is exactly what I want to see. And happy days. So I'll pull the sheet up. I'll show you what I mean by a wider stop loss. And then we'll wrap it up. And tomorrow I'll be continuing on with this. And I'll actually be showing you a little bit more of how you trade commodities. Okay, because it's broken up into a number of factors. You have your fuels, you have your precious metals, you have your copper put my teeth back in, like your copper metals, base metals if you like, and then soft commodities, coffee, wheat, orange juice, that sort of thing. But I'll go through all of that tomorrow, and I'll show you little things that you need to look at. But it was just really because it's Monday. We're starting off a new journey with this small account, and I'm quite happy with it so far. And I just wanted to show you. So I'll quickly show you the sheet. I'll show you what I mean by increasing the stop, and then I'll wrap it up. See you in a bit. Okay guys, so this is the state of play. I've finished now for the night. And what I've done is I've altered the targets, because if you remember last month we were looking for a pie, and today we've kind of upped the ante a bit for the coming period. So I'm now looking for around £300 a month, 75 a week. And
Hey, look at your bald head.
what was I saying about controlling it? You know, I know she always likes to be in the shop. Hey, what do you mean, bald head?
I noticed it when I came downstairs.
Just realised what she said, cheeky cow.
You've got a big bald patch there.
Bloody hell. You know they say never work with animals and children. Try working with a winky all day. Dear me. Oi, do I get the bikini for that?
Good try.
All right, that'll be no then.
You are physically repulsive, intellectually retarded, vulgar, insensitive, selfish, stupid. You have no taste, a lousy sense of humor, and you smell.
Well, 2 strikes. I'll try again tomorrow. Do you know something? I might actually just buy one and say, never mind what's the chances here. So if you see us with a black eye, you know it didn't go down well. Anyway, state of play. Up the ante. For the month of December, I'm looking to have banked in the wages around £300. Okay, 75 a week, 15 a day. Right, it's kind of the way it's broken down. Now, it's quite a tall order on the balance, and I don't care what anybody says, I have to double this. And yes, I can pull in some good figures if I catch the right wave, but I'm dealing in pennies, so it is still quite a lot I need to do. I'll still be doing the momentum push strategies that I do. I will be also in a position now where I can use the river, which is a longer term strategy where it can be a swing trade, and that can get me some meat on the bones. And I'll still be increasing the bids as I go by 5%, which is kind of what this is. All right. So scores on the doors, we're at 356.55. Look at that, which is an 18% growth in day one. So followed through from last month. It's looking good. Now, what I was saying earlier on about widening the stop, you see, if I was at the 79p, my stop for the oil would only be 21 ticks. With oil, it'll do that like that. It's too tight. It's way too tight. So I initially started this at 40p before I broke it in half, which gave me a stop of around 42 ticks. Now that was doable. The conditions were there. It hardly went against me, but if it did, 40 ticks is about right on oil. In fact, it is still too tight. So that's what I mean by dropping the bid size to increase my stop loss. And sometimes you're better off trading that way. Reduce the size you're putting on, but increase your stop. Your risk is identical. It just means your trade has a little bit of room to breathe. And then you're looking for your target points to give you your profit. You see, when I'm trading, I am looking at winning. I go into it with the idea I'm going to win. And that's why I scale. You see, I don't know how far the market will move. I really don't. But I know if it gets to this level, I'll get paid. If it moves to the next level, I'll get paid again, and so forth. But if it goes catastrophically wrong, I also know at the maximum point that I'm not going to take any more, and it's going to cost me money. So I know exactly how much that trade costs me at the start, or I should say, on the entry of the trade. So I hope that kind of makes sense. And it's kind of the way I look at stops. And my risk to reward is based on whatever I can get. It really is that simple. I don't confine myself to 3-to-1 or anything like that. I am looking to get more than 1-to-1. That's like a 1.6. But over time, it builds up, and I average around 1 to 1.3 risk reward on my day trades, which is, it's okay, because as long as I maintain my win rate over the 50%, which I do, I am in profit. Okay, so I'm going to leave that, and I'll pick this up again tomorrow, and I'll periodically drop in, and I'll show you the results as we go through the month. But I'm going to continue with a series of trading a small account, and we're up to trading commodities, which kind of the oil today, and I'm going to go through it a little bit more on the whiteboard, and that should be ready tomorrow or the day after. Okay, then after that we'll go down into indices and then down into Forex as well. And if you've got requests, by all means drop them in the comments below. I'm always looking to add extra videos for you guys and kind of try and show you what you want to see. If you're stuck, by all means contact me. You find my contact details in the description, or just put me into Facebook. I mean, I'm very easy found, and I'll try and put you in the right direction. Okay, so all of that, remember guys, do what you love, and the money will follow. See you all in the next one.